Welcome to the Knakal News Network. The Knakal News Network is brought to you by Massey Knakal Realty Services, New York's #1 building sales firm.
Hi, I'm Elisa Berlin, Director of Sales at Massey Knakal Realty. Welcome to the Knakal News Network. Today, I'm here with Bob Knakal, Chairman of Massey Knakal, and we're going to be talking about the multifamily housing market in New York City. Everybody wants to own multifamily property in Manhattan. Tell me a little bit about what you see going on in this market right now.
Well, I think you're right. Everybody does want to own multifamily buildings. They're always the product type in the most demand. People love them because they have very little downside. There's a lot of upside potential. They're easy to finance. Everybody wants to make loans on multifamily buildings. So demand is always overwhelming. In 2013, the market reacted a little bit differently. We actually saw the number of buildings sold was up, but the dollar volume of sales was down.
You mentioned that the number of buildings sold has increased. What do those numbers look like?
Okay, well, in 2013, we had 1,413 properties sell, which was up about 6% from the 1,332 that sold in 2012. So we had a pretty decent increase there, but yet there was a trend towards smaller multifamily transactions, so the dollar volume actually dipped.
What happened with volume?
Well, in 2012, we had $9.8 billion in sales. In 2013, that dropped to $7.5 billion, so that was a 24% reduction in the dollar volume of transactions. So we had more buildings selling, but a lower total volume, and that shows that we had a skew towards smaller transactions last year.
Number of buildings sold was up. Dollar volume was down. How did that impact pricing?
Well, pricing last year performed very well. The average price per square foot rose by 20.4%. The average price per unit rose by about 18%. Average gross rent multiples were increased by almost 1.5 multiples. And average cap rates citywide dropped by about 62 basis points. So all pricing metrics were extremely positive last year.
You mentioned the differences between elevator buildings and walk-up buildings. How did those two different sectors perform?
Well, the elevator building sector really kind of took its lumps last year, mainly because people just didn't want to sell them, so volume was way down. In the walk-up sector, things were much more positive. If we take a look at the numbers a little closer in the elevator sector, we see that the number of buildings sold dropped by 15%. The dollar volume dropped from $7.2 billion down to $4.2 billion, a 41% drop, and the total number of units sold slid by 32%. However, if we look at pricing on average in the elevated sector, prices were up by about 18.4% last year, so very, very healthy increases in terms of the value.
What about the walk-up sector?
Well, the walk-up sector did great. The number of properties sold in walk-up buildings increased from 1,040 in 2012 to 1,164 in 2013. And the dollar volume of sales in the multifamily sector also rose by about $200 million, and the total number of units sold in multifamily buildings rose by about 27%.
You always say that walk-up buildings sell for higher prices per square foot than elevator buildings. Why is that?
Yeah, well, that's actually a very counterintuitive thing, and when I mention that to most people, even people who have been in the multifamily sector for many, many years, they don't believe that that statistic is true. But if you think about it, the average unit sizes in walk-ups are smaller than in elevator buildings. The tenancy turnover in walk-ups is a lot higher than it is in elevator buildings. So what we see actually is that although you're writing a higher check every month to pay rent for a one-bedroom in an elevator building, the rent per foot is actually higher in the walk-up. So because you have higher rents per square foot, you actually have higher sale prices per foot in the walk-up sector, and that generally held true last year as well. In summary, the performance of the multifamily market in 2013 was somewhat mixed. The number of buildings sold was up, but the dollar volume was down. Elevated buildings experienced a slowdown in the volume of sales, mainly because sellers didn't want to sell, but walk-ups performed much better, showing increases in all metrics.
Thank you for joining us today. Tune in next week for another installment on the Knakal News Network.